everyone, welcome back to the Idiot Investor Guide channel with your host, me, Guy Davidson. Today I'm going to show you through a calculator I've made for showing you which platform is best to be investing in the US stock market through from New Zealand. We're going to be looking at Sharesies because we know what the fees are going to be now for investing in the US through Sharesies, Hatch and Stake. So Hatch and Stake have already been around for a while. I did a calculator a couple of months ago on those two to see which was the best for your different investment style, and now I've just included the Sharesies in there also ahead of them releasing their ability to invest in the US later this month. To be able to access and edit this yourself, I'll put a link in the description below. You'll need to create a copy of it in your own drive before you can actually edit it, because you'll only have view permissions when you've got the link from the description below. Please like and subscribe if you do enjoy it so that I can keep making videos and resources like this for you, because it's, takes a bit of time. It's really useful for me, so I just like to share it with you guys, but I appreciate the support. And if you're going to use it in your own videos or something, I'd appreciate a shout out for that. Getting into it, it looks like there's quite a lot going on here, but I've put instructions down the side here to let you know exactly how to tick your way through it. Essentially, there's only a few fields you need to fill out. Everything else is automatically calculated for you. So the first thing that you need to fill out is how much you're going to be investing regularly. So whether that's going to be $1,000, $500, $100, that's up to you. What's your regular investment amount? It may not be perfect, but just give like an average number of what you think you'll be investing each month or each week or however frequently you invest, because that is how we should be investing, dollar cost averaging and regular investments over time. That's how we'll create our wealth and compound those gains. All of this other stuff will calculate itself automatically. Down here, you just put the ticker symbol in for whatever stock that you want to be investing in. So say, for example, I wanted to do NEO, which is another electric vehicle. I put the ticker symbol NEO in, and that will load up NEO's stock price at the time. So this is all automated. You can just, down here there's a link that you can go to through MarketWatch that'll tell you what the ticker symbol is for different companies, or you can just Google it and you'll be able to find it pretty easily. You don't have to have all of these fields filled out. You could just have one stock or two stocks or three stocks, and then just say 100% or 50% allocation. So that is the next part that you fill out. It's the allocation field, and I've just put it pretty evenly across all of them for the sake of this exercise. But you could go up here and say maybe this one is 50%, and the rest of them you might not put anything in except this one as well, which is also 50%. As long as it's adding up to 100%, that's all that matters. All the rest of this stuff is automatically calculated, so don't touch that. You don't need to, it'll do its own thing. What you want to do is then come down here, and this will say how many years are you going to be investing and how many regular contributions are you going to be making per year. So at the moment it's saying I'm going to invest for 1 year, and I'm only going to make the one investment. So what this whole thing is saying is that, okay, I'm going to put $1,000 into each platform, and I'm going to leave it there for a year, and then I'm going to take it out without any additional investment. And what that shows is that for Stake, because it has a high foreign exchange fee, it's $1 versus 50.5, sorry, it's 1% versus 0.5 for Hatch and 0.4 for Sharesies. So that's why you lose out straight away when you put the money in. And then it goes through, okay, once the money's in, what's the brokerage fees for purchasing your portfolio that you want to based on this allocation up here. And then when you go to withdraw the money again, what is that cost of withdrawing the money? And the final calculation here is saying, okay, we've put money in, we've lost the exchange fee price, and then we've bought our portfolio, we've lost the brokerage fee, and then now we've withdrawn it again, we've lost the withdrawal fee. What is that in US dollars converted back into New Zealand dollars? And these conversion rates up here are also automated based on current exchange rates, so you never have to change those. So what this example here is saying is that if we took $1,000 and put $1,000 into each of these three platforms, bought this portfolio of stocks in the US market, and took that out after another year, that was our only investment, we just took that straight back out, what would we be left with in New Zealand dollars at the end of the day? So it's saying, taking into consideration all the fees that you'll pay, putting it in, buying a portfolio, and taking it back out, then converting that back into New Zealand dollars, what's the end result, which is this line here. So what you can see is that if we put $1,000 in once, Sharesies comes out as the winner straight away, the smallest foreign exchange fee, and it also comes out as the winner after you've withdrawn the money. So it's got the largest money that you'll get to withdraw back out into your own pocket. And I've put it as green for the winner, orange for second, red for third. So that's how to look at that. So you can see stake and hatch are a bit different because stake takes more money up front, but less money as you take it out, or less there's no brokerage fee. So hatch, although you get more money into the account, you end up having less coming out because of the higher brokerage fees. So you can go and have a play around with this. If I change this to be 12 investments per year, so I did $12,000 investments throughout a year and then withdrew the money again, you can see it's fairly similar results. Sharesies comes out on top again. And then if we wanted to maybe say we're going to make $5,000 contributions across all the different platforms, you'll see the numbers will start to change again. So you need to just keep playing around with this, but my suggestion is just put in what you're anticipating to do. So if I did more along the lines of how I actually invest, so if I said I'm going to do $500 into each of these platforms, I'm going to invest for 30 years. I'm a long-term investor. I'm going to invest over a long period of time. And I'm making investments every 2 weeks. So, maybe if I just, maybe say 24 investments in a year, that's my result. So it's actually fairly close between all of them at the start, but towards the end you can see there's quite a big difference because of Hatch's brokerage fees. So what this is really saying is that if you go and invest big amounts of money less regularly, Hatch may be the way to go because they've got a $3 flat fee up to 300 shares for the brokerage. But if you're going to do small regular investments, Sharesies or stake are going to be the way to go, and probably it will be Sharesies with the lower fees. So this is all really positive. It means actually for a lot of us out there, Sharesies is going to be probably the way to go when it comes to US stock investment, as long as they have the stocks that you want to be investing in. We don't know the depth of the stocks yet. So hopefully this is going to be a really useful resource for you. I'm going to, like I said, provide the link below so that you can get this document, create a copy, and have your own copy to play around with. I'd suggest being pretty reasonable with how you're going to be investing. It may not be perfect, 500. I don't always invest the same amount. I have a sort of target that I want to be doing every fortnight, but it's not always achievable. And you might look at the different fees and say, okay, instead of, I might save that much each fortnight, but then I might just invest it every quarter or something like that to bring fees down. So it really depends how you want to do that. And of course, it's going to depend on the availability of US shares in Sharesies. So even though it could be the cheaper option for you investment-wise, are they going to have all the shares that you want? And I would imagine they're going to have most of the major US shares, but there might be some more niche ones that you want to be investing in that they just don't have access to. So those are the kind of things you want to keep in mind. But I'm pretty positive for the outcome of Sharesies being the cheaper option for a lot of us that are going to be chipping away smaller amounts more frequently. I think if you're going to be doing large lump sums, then sort of Hatch might be the way to go, or stake. Anyway, that's just my thoughts on it. Not a financial advisor. Do your own research, figure it out. Happy to answer questions on the sheet. Let me know if you think any of the calculations are off, but I'm pretty sure it should be good. And yeah, I'd be interested to see what you guys come up with in terms of the results, because I would be surprised if most of you didn't actually end up coming out as Sharesies being the best investment platform for you. Anyway, enough from me. We'll see you next time on the channel. Download the link, share it around, and if you have any questions. Cheers.